Good morning. I have to get the podcast up and running. Move to trash. You're going to hear a lot. I'm going to do a lot of setup this morning with charting. So if you're here, hit the thumbs up. Blah, blah, blah. I got to turn the volume down. Excuse me. It is pollen season. Holy hell, it's pollen season. For anybody that has allergies. And yes, your boy went whiter. I went extra white with the hair. Let's bring the notes back up. So essentially, here's Boyle. This is Boyle on the 4-hour algorithm. It still has not gotten you out. It's trading at $6. It's down 3% in pre-market. Cleveland Cliffs is below 21 again. It's about the price that I bought it at. So, Powell killed the market. Occidental is up 3% because Warren Buffett bought another $50 million. Let's see, hold on. Let me look at how much he bought because it should be in the insiders list. He bought, let's see, March 3rd, 150, March 6th, 100. So he bought, 360. That's 360 million, not 50. And he bought it starting March 6th. So he paid somewhere in the neighborhood of $60. Kind of ironic. I called under 60, buy it over 60. I mean, that's when it was announced. He probably bought it down under 60. Mr. Buffett probably listens to my podcast and knows, boom, Gary says under 60, buy it, over 60, sell it. We going to do that. But I want to start out with SPY and looking at the daily on this one. You're still in the 402.98 trade. You're trading at 397 pre-market. ADP payrolls up. Oh, God. Futures just turned negatives because the ADP report indicates a very positive job market. So you had Powell speak. Okay, let's see. We're going to talk about Powell said higher for longer, and ADP jobs report indicates another strong month. So you may get a double whammy, and we may be going back to the October lows. But this was an interesting one. This is what I want to do, and I want to start this out on the daily, and so I want to save this. I want to chart. Let's do a trend line. So if you just start January of 2022, and then you go down to the October lows, okay, and then you get another trend line that hits there. Those are the trend lines that I want. I mean, again, in October, were we in a bull market Or are we just in a bear market bounce again? Honestly, that's kind of an interesting intersection where you get to 350, which, you know, the October 13th low was 348. But it's clear it just kind of sits there, and we're right at the mark. Do we bounce up? That's why everybody's saying at a key point is 396 or so. 396 to 398 is kind of the strong job market. ADP stuff came out. Oh, hey, Brian. Good morning. But I want to start with that chart. So I'll put this in the show notes. We'll share that one. That is SPY Daily. If anyone wants to look at that one. That was one that I wanted to look at. And then we'll switch to QQQ. Because QQQ has a similar setup as well. And sorry that you haven't sit through this charting stuff. It's just, I spent 5 hours yesterday, 6 hours yesterday, cutting some trees down. See, this is interesting. This was, I drew this line. Where did I draw that line to? I think that was a previous gap that had been formed. But you can see this gap that was formed November 2020 in the Qs before we took off to the December 2021 highs, 1 year, and then boom. Now you're at the point where you were in November at the end of 2020. So it's like 2021 never existed. But you're over the 200-day, the 50 days about to get a golden cross. Let's see. Actually, let's remove this. Remove all annotations. We're going to remove that. We're going to do a trend line. And that's the October lows. So we're going to go there. And then with the Qs, if you were to touch 3 points from the October lows, this January was just an outlier where you went down and then you had to come back up. So, and I think this is, we're going to copy this. I think it's Friday it's being introduced, Brian. I think it's Friday. I think it's Friday. But that's why you saw Meta up yesterday and Snap has been up. Let's look at Snap. Yeah, Snap's at in pre-market 1172. Looks like it's at 0. Let me see. Is that really right? I'm going into Active Trader Pro. Yep, 1173, 1174. The VIX is at 1985. Good year. Bowling for Soup, 1985 song. I'm going to bring up Boyle on here. Boyle is trading below 601. 6 seems to be a point. Let's see. Okay. And now I've got to do morning pay, Letty. I'm thinking about Oracle today. Oracle, don't they have earnings today or tomorrow? Hey, listen, here's the thing about Oracle. I mean, these guys are... I mean, I can't imagine... It's March 9th, so it's tomorrow. You had this buy-in at 88.70 or at 88.43, 88.36 before in pre-market. I can't, I'm going to bring that up. I can't imagine earnings. And it's Uber. I can't imagine that they, by the way, how did CRT do? Let's see. Because I wanted to see it, CRT. We got to cross up. It closed at 1782. Where was I going over it yesterday? Let's see. So the cross up happened at $18. And it's at 1776. Closed at 7. So maybe not a good call. But energy, I mean, just oil's going down. Yeah, so Zephin, here, let's look at seasonality. I mean, let's talk about seasonality. And you have, I know you have TrendSpider. So let's go back. If you hit this seasonality for Boyle, and let's go back as far as we can, October 2011, and we go week of the year. And you can do this. Here is the seasonality for Boyle. We are currently in the 9th week of the year. So you win 50% of the time. Next week, 58% of the time. You can see that there are definitely weeks of the year where you're getting a significant winning chance, I should say. And so seasonality plays a point. The next big week that we're talking about, next week is only 36%. So I wouldn't hold Boyle into the weekend. Honest to God, I just wouldn't hold it into the weekend. I'll bring that up. 36% winning chance next week. You know what? Is this? No, I guess I can't. I should. You know what? Let's post this. I'm going to take a screenshot of this. And I am going to put this into Facebook. We're going to put this. Boom, boom, boom. Brandon's posting in morning, Zeph. Morning, by the way. Let's see. Is this going into the group or is this? Man, I freaking hate Facebook. Hate Facebook. There we go. Seasonality for Boyle. Okay, there we go. There we go. Okay, and I'm going to post this on Twitter too. Why not? Let's post it out there. Let's get our social grip on. Tweet. And boy, I got to tell you, on Safari at least, Elon has done an amazing job with Twitter as far as the response time from seasonality. There we go. Morning, William. Morning, James. By the way, I missed your morning message in there. Let's see. I like that one. Holding a red iPhone. Yeah, it's day 2. By the way, if you guys haven't tried this, and Zephin, you should probably try this. Go and watch their video, TrendSpider, on Go No Go. I like that indicator that TrendSpider uses. I really do. I think it's good. We're gonna take that out. We're gonna go back here. So this is your seasonality, Zephin, in TrendSpider, and right here. Again, you have a 58% win. I would guess, and again, it's just a guess, but you're heading into a summer. I don't know about you, but it was 80 freaking degrees here yesterday. Europe's warm, blah, blah, blah. But Oracle, I do want to talk about. I've got Tesla up there. You know what's quietly been just doing really well? Roblox. Quietly. I mean, look at that ascending triangle. Look at how it got you out at, down here and then got you right back in with this big jump. But honestly, I don't know that I would have gotten out here at 35. I would have waited for it to go back up to, I would have gotten out here at 40. I absolutely would have gotten out here at 40. But quietly, it's at 41.57. I mean, again, this is in the core portfolio. So and if you guys want to know a system, a process, I literally log into TrendSpider. I go to that core portfolio in my upper right, and I just scroll down, and it shows me everything that's moving in the pre-market. Even during the day, I'll just scroll down that list. I also have a separate list that has my portfolio in it. So I'll scroll down both. Again, TrendSpider kicks ass. Boom, boom, boom. Nothing in the brokerage portfolio. Let's see about core investments. Costco had a cross up. Was it today or let's see. Yeah, pretty good cross up right after earnings. God, should have gotten this at around 460. I keep wanting to get into this. I just don't time it right. Energy names. Let's see. Anybody in CHRD? Let's see. The dividend should have come out of it. Or is it tomorrow? Oh, maybe it's. It hasn't opened up yet. Yeah, I'll add RC. I don't even know what RC is. When you say RC, I think of cola. Is it Cooper? Okay, let me go back. Energy names, no energy names. Levered ETFs. Let's look. SMDD. SRTY. So if you think Powell's going to screw up the market again today, this is your short mid-cap, ultra, SMDD, SRTY. I'm doing this for you guys on Facebook. I'm sorry. I should go live on Facebook one day in the group so that all you effers are forced to join that one. No low cost Vanguard. Let's see about spider sectors. Nothing in the spider sectors. This is my own personal watch list that has a ton of, hey, let's just Airbnb. That's an interesting one. Teladoc had a cross up. I don't like Teladoc though. The trading desk did. Let's see, is this one? Trading desk, oof. That's a good chart, man. There's a lot of gaps down there to be filled, though. But, God, you still have confirmation in this one. And, okay, you want to know about Bollinger Bands? And I'm going to start a newsletter. I really intend to do this, and I just get so distracted during the day. Believe it or not, for a retired dude, I'm busy during the day. I mean, there's not a day where I don't know how I used to get all this stuff done. I think I just never got it done. But how I used to get all this stuff done with a full-time job. Although you guys are a full-time job. I mean, shit, I do 6 to 8 hours a day of just stock stuff. Boom. Let's look at, I want to see Cord Energy, because that was a big, it was, the dividend's already been taken out of that. And it's come back. So, and MACD's a little bit high. The RSI's at 62. Not horrible. Come on, ARC Holdings. Okay, it's not scanning the ARC Holdings. I don't know why it's doing this. By the way, let me move you just over here for a second. And we talk about bond rates all the time, and I want to bring it over to the 1 year U.S. Treasury. Remember, we've been looking at this. The 1 year U.S. Treasury, which started off the week at like 4.9 something, is now 5.34. I mean, this, when you're talking about 1 year rate of here, if you go down here to corporate, again, these are tax-free. There's no risk. There's no, fear of default, blah, blah, blah. But if you go down here to BBB level, you're getting 6%. Now, I'd argue, take the 5.34 versus 6.75. But there's a good amount. I mean, you go out to 2 year on the BBB, and you're getting 8% per year. Tell me somebody's that's not happy getting 8%. You are, risking default. You go to 5 year, you're getting 8.25. So, and these are best to, let's see, new issues. Oh, I have to log in. And I ain't going to log in. I am not going to log in on here. No. I'll log in. Ooh, here we go. Okay. IOVA. Kind bars. Oh, that's Nextdoor. Man, that symbol for Nextdoor. Nextdoor is the most Karen-filled website that I've ever been on. And for them to have their symbol, Teladoc and 908 devices. No, let's go to the Dow 30. I don't think any of the Dow 30 crossed up because yesterday was an ugly day. But I've been surprised on other stuff. What is RC? Let's see if RC. Ready Capital Corporation. 1.19. I mean, it's a small cap. Here's the thing, Cooper. $106. Director about $106,000 worth of 14. Morning, Sherry. He bought at 14 right before that freaking just monster drop. But it hasn't been covered. I'll bring it up. You know what, Cooper, here, I'm not going to bring it up on the podcast. I'll do it right here for you. RC. This is an earnings issue. And I would urge you to look at whatever is here. Don't look at the charts. Look at what's ever here on the earnings. Those results. Global Newswire, it's just going to be from the company. Read those results. It doesn't look like... It says dividend 14.53, but they may have taken the dividend out. That may be why you saw that because I see a monthly dividend here, or at least a quarterly, but I don't see a dividend date. And that may be why you saw that big drop. I would worry less about the chart on this and more about, oh shit, what happened to bring this from 12 down to 10? That's a big move on an earnings. And it doesn't look, the earnings went from 46 to 44 to 40. It definitely looks like to me, without being able to find an ex-dividend date here in the future, I'm going to wipe that one out, Cooper, because I don't think it's an opportunity. I think it's more of a research one rather than a chart one. I will tell you from a chart perspective, let's look. I'll look at the algorithm and show you if it has a buy-in. 1101 is the buy-in. I'd be careful though. Remember the algorithm. Here's the results of the algorithm. The algorithm loses you 1% over 1,000 candles. The actual stock buying and holding loses you 23%. So it's a falling knife. Here, if we go to a weekly of this one, it's just, you had your COVID. You're well under your 200-day. But they were paying a 14% dividend. There's no reason this one shouldn't be at its 200-day. The only reason it falls down. But yeah, you can see 57 cents, 51 cents, 41 cents, 52 cents, 64, 67, 48, 46, 44, 40. And then you get this big spike. Look at that huge spike right there. That would worry me. So I'll take it out, but I think, I would be very careful of that one because I don't think the chart tells the story. And that's why kind of when I talk to you guys about doing both fundamentals and technicals. So fundamentals are, you go to FinViz, you just look at that stuff. Technicals are the chart. And I particularly do both. And the reason is just that. You can say all you want about technicals and the bounce and things of that sort, but if the fundamental business is just horrible, you're not going to get. One that I wanted to look at is Verizon. That brings up a good one. See how it's fallen off here? I'm going to bring up Verizon for its is that my house cleaner? Hold on. No, that's the nanny. the nanny next door. Verizon. I'm watching Verizon for and the reason I bring this up is because T-Mobile came up with a cross-up. I just think T-Mobile's too expensive. But Verizon, for me, it is a falling knife, kind of like I just told you, Cooper. I'm not a big fan of falling knives. But this one has a really good dividend, and it's kind of put this floor in here between 35 and 37, I would say. And if we just look at a weekly of Verizon, you can see since October, you've kind of put this bottom here. And cell phones, to me, are a race to the bottom. They're just, it's expensive to have this network out there, in a time where costs are rising. Potentially, consumers are going to be cutting back. This is a problem. How do I get this to collapse? There we go. It's an interesting one. But Verizon here, this is why I like to watch it. Because instead of a bond rate at 5%, I'm getting paid 6.88% here on a dividend. In a company that, if it flounders down here, you're not going to keep that dividend. They're going to cut that dividend like AT&T did. But AT&T... look at this chart. It's kind of the same thing. You kind of came down here to 14, and now you're at 18, and you've just been floundering around this 18 to 5.93% dividend. So I got asked about REITs last night, and I was doing some research into dividends and stuff. But, okay, we have Costco. Let's go to S&P 100, and then we'll go to the energy sector, which... yeah, only T-Mobile and Costco in the S&P 100. And we've got those. And so let's go to energy. I'll stick with the same. Any of these catch my eye? That's ugly. PFIE. Don't know you. I hate that chart. Nope. Nothing that I want to risk my dollars on. And boy, we got a lot of green. Okay. And I'm going to bring these two up. There we go. That is funny, man. I think I need to talk to TrendSpider. I don't think they paid me since November. I like that. Working a day job. I think they're listening to me where I hate sitting there looking at charts. Okay, I'm gonna start the podcast. Boom, boom, boom. Good morning. It's Wednesday. Post Powell Day, I guess is what you'd call it. I think. I don't know. He killed the market yesterday, kind of like we had said he would. And what I wanted to do was take a look at, we're going to go take a look. This is a chart. I've been sitting here scanning SPY and looking at some things. You can see I kind of did this, and we'll go over here. This is the actual chart, and I hope you can see it. Let's see. Yeah, on Facebook. I will post the link to this. You can link to this in the show notes. But what I did was take the January 2022 lows, which we shot up from. You saw January was a good one. And then we fell down in February. And I took that line and just kind of made sure that I crossed at least 3, but I touched the October lows. And that big green bar down there, that's the October lows on SPY at about 348, 347, somewhere in that neighborhood. And then I took a line and I crossed into January and December 2023, crossed those lows. And then you can see where we hit kind of in March here, where we hit the trend line as well. And I just wanted to cross that up. So the question is, if we are in a bear market, this line holds true. So that October lows, if we're going to go back to trending down there, this line holds true. If we are in a bull market and we've switched and all of a sudden we're going for a run, then the upward trend line takes precedence. And so that's providing you support right around 395, 396. I think a lot of technicians are talking about 395 to 398 as being a good support. So if we break that, then they're talking about down here at like 370 being a support. And that's kind of on SPY and looking at the S&P and its generals. Now, if we take a look at the Qs, it's kind of the same thing. It's just a little bit more dramatic. So I didn't go back to January. I took the March, and you can see down here, you kind of cross here in October, where again, it was around 240 something, 250 something in that area. But you can see we're kind of bouncing off it and we're just up it. So the question is, do we have more down? Do we have more up? Powell yesterday basically said, hey, we could go higher than what we predicted in December, and we could go longer. So that's what brought the market down. And so when we go back here, again, these trend lines are in here. I'm going to actually remove all the trend lines on SPY so we can see it. You had this buy-in on March 3rd at 402.98. And you're still in that. Even though you're at 398, you're still in this play because the MACD, when we look at the MACD here in the algorithm, it still hasn't crossed down. So quite simple, easy way to look at this. Again, is October the low? Is back here at 360, 340 something? Is that the low? Who knows? We're up above the 200-day if we go to a daily chart, which a lot of algorithms in the big money players look at. We're still above this 200-day. You had this golden cross right here, February 3rd. So the 200-day, you're still holding on to that 200-day. It's about 392. And so that 390 level, if you cross that 390 level, we could be going down significantly down to the 350, 360 area. This gap has been filled. This gap has been filled. You really don't have a lot that's guiding you in this. That's why Jay Powell is key, and he, higher for longer. That essentially is what he said yesterday that brought the market down. He's going to testify in front of the House today. It was the Senate yesterday. The House is today. And then Friday, we have the February jobs report. And here's what you have to know. ADP came out, a very strong jobs report today. And the futures kind of took it in stride. So does it, we talk about in what your grandmother's making for Christmas dinner is already priced in the stock market. So does the stock market have this priced in? It did not have, hey, we're going to go higher than we expected. Obviously, yesterday with a 1% loss, when Powell said, hey, we're going higher than we probably predicted with the strong job market, didn't have that priced in. That's why you saw the reaction. So that's where I want to go from an overall standpoint. Again, I'll post this SPY chart. I'll post this QQQ and the links down below. You can take a look at it. If you have TrendSpider, you can do those trend lines yourself. You can take a look at it. If you sign up for TrendSpider in the links below, I'll give you my algorithm. DSP25 is the 25% off code. You can look at that. I'm seeing a lot of green on our core portfolio, just scrolling up and down. One that I wanted to bring your attention to, because I believe I'm in the red on this one, is Cleveland Cliffs. I think I bought it around $20.90. It's at $20.83 in pre-market. It's had that button hook that I talk about all the time. But I want to make sure that you guys know I am not using the algorithm. I'm going to have a stop loss in here, down here. If it breaks below 20, I'm going to add significantly amount more. I think that Cleveland Cliffs, again, with that RSI trending down at 47 and it kind of holding up here, I think 20 is your swing on this one. So Cleveland Cliffs, it's a recent purchase for me. I only put in about 10% of my total buy. So as it gets down to this level, I'm adding more. Simple as that. CrowdStrike. We don't have Crowd, and I talk about this one. I have Palo Alto in the core portfolio, and they're both cybersecurity companies. CrowdStrike reported last night. I didn't kind of go over it yesterday. It's still a gamble because it's so expensive. They beat on earnings, 47 cents. You can see 36 cents here, 40 cents, and 47 cents. You can see they're beating on earnings. They also announced a very, very good forward plan. Expectations are really high on this one. They are up 5% at $130 per share. And the reason why I don't bring this one up is because they're not making money. Their forward PE is 62. Their price to sales is 14. Doesn't have a dividend. It's up 18% year to date. And so you can see where it's come from. I think my average purchase price on this one is around 150 or so. I have not added a bunch down here. I probably should. But the expense is what kills me. I believe in this company. I believe that when we get back to things, I'm not trying to time it. I'm trying to make a long-term buy decision. And this and Palo Alto are the same ones. Now, Palo Alto, their PE is 2,431. Their forward PE is 40. These guys have to grow significantly. This chart looks much healthier than CrowdStrike. That's why CrowdStrike, when you look at FinViz, CrowdStrike looks like it's an opportunity, but again, they're expensive. That's the basic thing. Your 52-week range is between 92 and 242. You're kind of right in the middle. But I do think that CrowdStrike has an opportunity. Their average target price for the monkeys is 166. So they reported really good earnings on that one. I want to take a look at Tesla. Because I've said, hey, Tesla, I think there's this gap down here between 147 and 155. I think we're heading down there. Now, it's at 187. It is down 1.2%. I'm sorry, it's at 185 pre-market. It closed at 187. You're just getting out of this 62% run. I think you're heading down towards here. Do we get to the 108, which is the gap on the daily, which is way back from like 2020 somewhere? I don't know. I mean, you're playing right here. It's putting up a pretty good support level here at about 180 to 200. And you've got this gap up here at 257. Now, again, this one's super expensive. It's never played on fundamentals. The PE is 51. The forward PE is 34. Doesn't have a dividend. So it's pretty much off its 52-week low is 101. And that was, you're 84% above that. Its 52-week high is 384. So you're 51% below that. I do think that at some point in time, you hit this 257. So if you wanted to buy it here, I wouldn't blame you. You just don't have confirmation. Your RSI is at 40. It's trending downward. We've seen this downward slide before. If you look here in December, where it was a buy at 185 right here, and it just slid all the way down. You could be seeing that same kind of trend. If we go and look at a long term of this one, you're seeing that trend under the 200-day. And then, does that blast off happen? I don't know. I wish I did. But Tesla, I wanted to make sure that you guys were up to date on that one as well. Daily chart, Boyle. Let's look at Boyle. I posted on the private Facebook group and on Twitter a seasonality chart for Boyle. I think Zephan asked me, hey, what does Boyle look like? Should we seasonally look at it? Blah, blah, blah. Well, you're in week 10 right now of the year. And you have a 58%. This goes back 11 years for Boyle. And it's week of the year. Right now, you have 58% win. 58% win rate for 11 years. Next week, a 36% win rate. You're getting into a seasonal time where you're kind of almost just in, it's 11 years. So right now you win 6 out of 11 times. Here you win just about 5, maybe 3-4 times. It's 36%. So the interesting one is week 43 of the year. 0 out of 11. Your median change was -7%. Your median change here is 0.83%. Next week, it's 0.48%. So it's not big moves, but for 11 years, you can kind of take a look at that. We are still in Boyle. I do think that Boyle $6 is your swing point, and I would have tight stop losses on your swing point here. It's trading at 619. It closed at 619. It's trading at about 610. I would, if it were me, I wouldn't hold this overnight. And I definitely, with that seasonality chart, would not hold it over the weekend. So if you're looking at Boyle and you're about to ask me, hey, should I get out of Boyle? Yes. Answer's yes. Just if you ask me, should I get out of Boyle? Absolutely 100%. Do not cause yourself any stress. So I would be significantly worried about a downturn on that one, because I do think the trend brings you down to $2 a share, between $2 and $4 a share. Doesn't mean that we won't go and fill this gap up here at 14 or 12. If for some reason a pipeline bursts, if for some reason Russia shuts off their oil, if for some reason something like that happens, I think you'll see something like that. But yeah, you can't count on that. I wouldn't hold Boyle more than, a 5% stop loss on that one. Because if it's down 5%, it's going to be down 10%, and you can just buy back in and gain your 5% there. We had a question about Oracle, podcast favorite. They are reporting earnings, looks like tomorrow, March 9th, after the bell. For me, I might buy in before this earnings. And the reason is, again, this is all priced into the market. The PE is expensive at 27. The forward PE is 15. The dividend is 1.45. Year to date, you're up 8%. The average share target price is 92. The 52-week high is 91. You're only 3% off your 52-week high. Here's why I say I might buy into this one, even with the extended. This is the first kind of hearing that we'll have as to their expectation of Uber. And if you didn't know, Oracle won the Uber business, where they're going from on-prem servers to cloud servers. So all of the data now, when you go to your Uber app and it's pulling up data, it's all on-premise servers. And nobody does on-premise servers. But Travis Kalanick, who was the CEO of Uber, didn't trust anybody, so he set it up as on-premise. They just never went to cloud. Well, now they're going to cloud. And there's two companies that they picked. There's Oracle and Microsoft. I think those are the two. Or it might be Oracle and Google. I'm not sure. But I know Oracle's the big one. February 3rd, you can see a director sold. You can see an option exercise. This was an option exercise, $30.11. That just means that this dude had options at $30.11. So he bought the stock at $30.11. This one, Vice Chairman, same guy, he sold at 82. So he optioned those shares at $30.11, and he sold those same shares at 82. This is what makes me worry a little bit. These guys this is not pools in the backyard. These are high-level corporate people who are selling up here in the 75 to 80 mark. So I'm just wondering, is it worth it? I don't know. I'm a big believer in Oracle long-term. Them and Apple are the two that actually provide. They buy back their shares and they basically retire them. They don't give them out. Blah blah blah. So that boosts your share price. So between those two, I think that Oracle, for me, what would worry me is just bumping up against that 52-week high. One that I'm watching, and the reason why I'm watching it is because of the dividend. But Verizon has kind of been lagging here. It got you in $38, and then it got you right back out with a 1% loss the next day. The MACD is just kind of hugging down here. It's been down here before at 35, and it kind of ran up to 38, so you got your 10%. Your dividend date is coming up on April 6th. And the reason why I watch this is because I looked at bond rates. And bond rates, we looked at this all week, even up the last couple of weeks. 1 year, U.S. Treasury, 5.34. 5.34 for 1 year. And if you need the money, you can always sell it back out. But that's if you just hold for 1 year, the worst that you'll get is 5.34%. That's really, really good. Now here, Verizon. If you want to buy Verizon with the RSI at 32, which means it's oversold, which means you're bound to get it, up. The algorithm has some RSI stuff built in here. It doesn't build in, but for me, I always look at the RSI, and if it's under 40, I'm like, maybe I want to buy it. The MACD is down there. It is a capital expensive business. Building out 5G is capital expense. So I have no doubt in my mind this could come back down to 35 here. You just have no confirmation right now, but I have my eye on it. And the reason I have my eye on it, 6.88% dividend. Doesn't mean that it's going to continue. They could cut that dividend and say, hey, we're going to put more money into our network. The second they do that, though, the street's just going to destroy them. Right now, December, there were 3 upgrades in December and 1 in October. The average target price is 44. You're trading at 37. So the algorithm doesn't have you in, has you out, but I'm keeping my eye on it. I like that one. So let's talk about some of the cross-ups. And again, I said this yesterday, but I'm going to say it again. Patience in this market. You don't have to make money today. If you don't know where a stock's going, and you don't have confirmation that you think it's going to go up, don't buy it. Don't buy it. Cleveland Cliffs is a perfect example. I have confidence that this one at some point in time is going to be 30. I just don't know when. I'll buy more if it goes down. I didn't blow my entire load on there. If I need to, sell it at a stop loss, if I lose 5% on this and I think it's going to go down 10%, I'll just sell it. Take the loss and then buy back in. Or I'll take my money and go somewhere else and write that loss off. Some of our scans, Costco, 488.63. God, I wish I would have bought this after earnings where it dipped down to 470. But 488.63, it's trading at 485. It's down slightly today, but yesterday 488.63 is the price that it's going to figure out that. This one makes you 42% over 2 years with the algorithm, buying and selling. There are 21 positions. If you would have just bought and held, you'd make 47%. It's been a good stock. They have a small dividend, nothing huge, 0.74%. The average target price is 547. I say anything under 500, go and get it. Anything over 500, I think you can sell it. There's no membership increase. They have increased costs, blah, blah, blah. The hot dog will remain the same. Nothing crazy. With yesterday's Powell kind of ruling, Ultra Pro Short Mid Cap SMDD, Sam Michael David. This is one that shorts the mid cap. It's a secondary cross up. We had the initial cross up here on February 7th at $16.99. You're trading at $18.47, and you're trading in this ascending triangle, and it got another cross up. So the RSI is at 58. It's a little bit extended. Do I think you can get up here to 20? I don't think so. I think something's going to happen where this one just, mid caps come back. I think it's a little bit expended. Same with short of the Russell 2000 SRTY. This is Ultra Pro, so it's triple levered. We had the same February 7th cross up here at 39.62. You're at 43.69. So it's a secondary cross up. Same kind of thing. Again, we talk about triple levered, double levered, blah, blah, blah. Airbnb crossed up. This is one that I don't think you wind up buying up here, even though I think this will be a long-term winner. I just rented an Airbnb for March 18th, I think. I'm going on vacation in Virginia. We're going hiking up in the Smokies. So along the Appalachian Trail, I believe. But yeah, 128.06. It's a little bit expensive in my mind. You can look at the October lows down here at 85. You're well above your 200-day. I mean, let's see where we are in the 200-day. If you come down to this 200-day, you're 18%, 17% above your 200-day. Kind of expensive to me. I'd wait for that one, but you do have the Golden Cross. You have a moving 200-day that's moving positive, Everything's moving positive on this one. It's just expensive. But, again, the question that I have is, if you're staying in hotels and not using Airbnb, do not buy Airbnb. Motley Fool has an article right here, 2 no-brainer growth stocks to buy right now. They say Airbnb, the PE is 45, the forward PE is 31. Can they grow into that? Year to date, you're up 48%. I mean, that's a pretty good return if you had bought in January. So they had a cross up. Another one, the trading desk. We talk about, I know I talk about the trading desk a lot. I like this company. This one is a secondary cross-up, and it's crazy because the secondary cross-up is significantly lower than the first cross-up. The first cross-up was here right after earnings at 62.53. You immediately drop down. You still have a gap down here at $50, but this secondary cross-up happens up here at 57.65. That's essentially, again, the RSI is high at 56, so you might have a little bit of risk down here to 50. I would hold a very tight stop loss on this because while it does have confirmation right now, if it dips below this and comes down to the 200-day, which is at 50, you're losing what, 12, 15%, somewhere in that neighborhood. So maybe buy a put if you think it's going to go down. Protect yourself a little bit. But yeah, so Powell's saying something today to the House. Yesterday was the Senate. Today's the House. I wouldn't expect too much from that. It's going to be more of the same. I don't think he's going to blow the market up again. As far as the futures go, let me look on the CNBC app. And just so you know, you can go to the CNBC app, hit markets. Yeah, the futures are up a little bit. Nothing crazy, but they're up a little bit. I wouldn't expect today to be the huge mover that yesterday was. Yesterday was just bad, but we had been in a rally. Disney's under 100. Boeing is at 208. Bank of America is at 32. Goldman Sachs is at 346. I talked about Goldman Sachs having that cross up. It got you right out after 35.55. Bank of America, let's see, did that one get you out as well? Yeah, got you right out. With yesterday's, a lot of the cross ups that we had earlier in the week, they just got you out. Google, you're still doing fine. Google didn't get you out. Google still got a good cross up. If you listen to the algorithm at $90.67, you're fine. I need to add more to Google. I think anything under 100 on Google is great. Talked about Coca-Cola. Coca-Cola is at $60.20. We had a cross up at 60.12. I said anything under 60 you can absolutely buy. Their ex-dividend date's coming up here March 16th. So there's opportunity out there for the long term. If you're looking short term, I'd be a little bit, skeptical of the short term because the jobs report on Friday is going to be key. If we have a super, super strong jobs report, you're going to get screwed. I mean, if that comes in at 300,000 new jobs, 300,000 plus, I mean, you're going to get screwed. You're just going to get screwed. Target at 162. I still think this one gets up to that 211 gap that we see back here. If I pull this back a little bit, this one right here, 211, 213. I think that one gets there. VOO, you just had a cross up on VOO at 370. You're at 366. Like I said, I don't know that 370 is your entry point. I think 361 is more your entry point. I'm going to buy more of that when it hits its 200-day. I've been waiting for it to get to or under the 200-day for me to pull the trigger. Uber, 34.15. I've been waiting for this one to get under 30. I don't know that I'm ever going to get that again. But I'm holding out hope. Oh, you know what? Before I leave, Kirthik wanted me to look at some, and that you just reminded me looking at this. SPG, Kirthik said, what's your take on SPG? SPG, we had the buy-in here at 122.57. You're trading at 120. Now, SPG, their ex-dividend date is coming up March 9th. And if we go over here, I like SPG. SPG's PE is 18. Their forward PE is 19. They have a 6% dividend, 5.95. They're up 2%, So if over 1 year you're down 11%, but you made half of that back on the dividend, 6%. So I do like SPG. I just am not sure that I like it at this level. I do think that closer to the 200-day at 117, you could probably get it at that. Oh, I got to sneeze. Oh, excuse me. Sorry. Pollen. Oh, sorry. I had to sneeze. But SPG, I would be looking at that one. He also asked me about SLG. I don't know what SLG is. SL Green. Ooh, that's a falling knife. I think it's a REIT. It does have a buy-in here at $34.92. It's trading at $32.92, but SLG is, REIT, 10% dividend. You're going to lose your 10%. I mean, look at that 1 year. You're just going to lose. You could be buying it for the dividend. It's not making money. They're just paying out everything on their dividend. And when they cut the dividend, boom, that stock just crashes. Main, MAIN, which is Main Street Capital Corporation. This one looks a little bit better. Your buy-in was at $39.55. You've crossed your ex-dividend date, so you don't have a dividend. Let's see. I think this one probably is a REIT as well. Financial Asset Management, 6.5% PE. 6.5% dividend. You're kind of crossing close to your 52-week highs of 45. Your average target price is 43. You're right there. It's just too expensive. In my mind, you've passed your ex-dividend date. No reason to buy it now. Nothing. You'll come back down if you like that one. AGNC. Right now, it looks like it's trending toward its 200-day at 1013. The buy-in is at 1063. This chart looks a little bit interesting, but I would be worried about this gap down here, 865 to 891. What do they do? Let's see. AGNC, they're not making money. It's a REIT, 13.6% is the dividend. I mean, I'd be worried about any REIT I've always looked at. I'm just worried they give you AG's latest rating from JP Morgan and Company, setting target price at $12.50 with a rating of overweight. Yeah, JP Morgan just put it overweight and their price target is $12.50. So you're trading at $10.59. When's the dividend? You've passed your dividend date. Looks like you did have the golden cross here. If you get up to $12, it's great. I mean, you had this run from October where you had a 38% gain. Plus, you got 3 dividends in there of what? Almost a 13% dividend with a 38% gain on the algorithm. So this was a good one. I don't know, whether it's great or not, but, again, REITs, take them or leave them. I think they just give their money away in the dividend. So you can take that out. They're just not putting it back in. But Kirthik, that was a good one. And by the way, anybody watch if you want to go to MLS.com, you can watch a dog in Philadelphia come out onto the field and chase the ball. They stopped the game. It was great. It was fantastic. I emailed my MLS guys. I said that was, if I was at that game, I'd be cheering like crazy. You guys should make that happen almost every game where a dog comes out. That should be the honorary mascot for every MLS game where the dog comes out and plays with the ball. Okay, if you made it this far, hit the 5 stars. Just rate me if you would. RATE, rate me. If you aren't on YouTube, just gentleman's agreement. I mean, you made it this far. Just go over to YouTube and hit the subscribe button. I don't care if you ever watch YouTube. The charts that I mentioned are down below. The links to them. If you want to sign up for TrendSpider, DSP25 is the code to get 25% off. If you pay more than $30 a month for your phone service, click on the link tree below. There also is a link for Visible. They are a sponsor of the podcast. Just go below, click on the link, check out their service. I personally have Visible. I pay $30 a month for the service. I have enjoyed it. I go on 10-mile walks every day using my data plan to stream either CNBC or a podcast. I absolutely love it. I get 5G. You guys that are paying $50, $60, $70, I mean, you're just wasting your money. $30 a month. I don't get downgraded. There's no degradation of signal. I'm next to people who have Verizon who pay $70, $80 a month, and it's the same freaking service. Same exact service. So go down there, click on the link, sign up. I think you get a 7-day trial. Either you get a 7-day trial of TrendSpider. I know that. I think even Visible has a 7-day trial. Port your number over. You can get an eSIM. If you have a eSIM phone, just get an eSIM and you can try it out. I think they gave me 2 weeks free, but I don't know if they still do that. But again, if you're paying anything more than $30 a month for your service, just get over to Visible. If you have any questions, hit me up. Join our private Facebook group, and I will talk to you guys tomorrow. Let's hope Powell doesn't blow up the markets, because right now everything's in the green, slightly in the green, but everything's in the green. So, and Boyle's at 612. We started out and it was at 6. So, take care. See you tomorrow. I made Kirthik wait until the end. Okay, now let me read. I have such... By the way, if you're here, hit the thumbs up button. Maddie, good morning. Morning, Justin. Brian, it's a trade. It's not a it's for the people that want to trade and bet and gamble a little bit. That's all Boyle is. I've played, and Matt, I'll take a look at PLD, but the only reason I bring it up is because people want to day trade it, and you can, if your target is to make, I know people who target 1% per day, because if you target 1% per day, you can make 200% in a year. If you want to trade 200 days a year and you target 1%, you make 200% in a year. I personally, during 2020, was targeting 10% per day. And yeah, most of 2020, I had significant gains in 2020. I lost a lot on UCO. I was learning to trade that freaking levered ETF. But I did make a lot of money in 2020. It was like shooting fish in a barrel. It was great. Prologis. I like Prologis, man. Their ex-dividend date's coming up, March 16th. 125 was the latest buy-in. About 125. You're trading at 123. Let's look at a longer. If you just, this has been a good, honestly, with the amount of warehouses and stuff like that people are deploying, e-commerce, this is getting killed because they've overdeveloped and they don't have pricing power anymore. That's my belief in the overall business. Now, I'm not an expert on this business. I just listen to people. They've overbuilt warehouse space. You can see downgrade JP Morgan. Their price target went from 120. It's funny. They went overweight to neutral from 124 to 130. Their PE is 28. Their forward PE is 43. That's what you have to worry about. If they are giving guidance that their earnings are coming down, and their current PE is smaller than their forward PE, they're going to have to continue to grow revenues. I just think, you're right in the middle of this kind of wedge. You can see that top right there where it touches 2. That was in February. Do we get back up here to 135? It's got a 2.81% dividend. The target price, the average target price is 142. Let's look at where people are, director, buy. These are 2 directors that just bought over $1 million worth at 114 to 118. You're trading at 123. They believe in it. these don't really matter. But total revenue, $5.9 billion. Cost of revenue, $1.5 billion. So they're making about $4.25 a share. I mean, I like the stock. I just don't like the price of it. And I'd rather see it on the downside of this 200-day. The problem is that your 200 days you had this golden cross right here. I got to sneeze. So, Maddie, I like it, but I don't love it. I mean, and the only reason I don't love it is just you got this gap down here at about 116 to 117. And I think that's where this one was going. And then something happened and it just bounced off. It got oversold. You saw a big MACD push up. Now this MACD cross up that you see right here at 125, you can see if I make this larger, that MACD is kind of just, it looks like it's going to cross down below that strike line. So I don't love it here. I think if you can get this under 120, I think you'd be doing better. I wouldn't buy it at 123. But, again, in my mind, you just got to be patient. Your ex-dividend data here is March 16th, but it's only 2.8%. They're not going to pay a ton. Here, Motley Fool. This is a Motley Fool article. Continue. Man, they are just milking the ads at Yahoo. Instead, they consider buying shares of fellow industrial Prologis and East Group. Prologis has maintained a strong financial profile, even though it also recently made a sizable acquisition last year. It acquired its largest rival, Duke Realty. The all-stock deal valued Duke at $26 billion. Because of that, the company has been able to continue growing its dividend, recently gave investors a 10% raise, and has grown its payout at a sector-leading pace in recent years. It's been good. I mean, it's not horrible. I think it's a good business, but, read up on it. I don't think that the chart tells you anything that the earnings don't. I mean, you look at that slide back here in September to October, the October lows. You're at 100. You're right in the middle here. I think you're in a trading range. So there's my take on that one. Let's see. I'm going to close this out. Market just opened. I'm going to close that. Do I have did I export to disk? 3.8, yes, I did. Quit, save. MGM and Frontline. Dude, kudos. High five on the 20%. That's awesome. That's great. Why'd you get out? If they're continuing going up, why'd you get out? That'd be my question for you. Let's see. MGM. Actually, you know what? Hold on one second. I'll move you over because I got to type in a password. Podcast. There we go. Okay. I was trying to keep it under a half hour today. P-coat. I like P-coat. And we'll insert ad. Okay, let's see. MGM. Move you back over while it uploads. MGM's got this gap down at 41 based on the earnings jump that we saw. But that's a big move down from where we are. I mean, you got the MACD kind of crossing down a little bit. Let's look at MGM. Yeah, you know what's funny, Matt, is that my parents live in New Jersey, right off the turnpike. Exit 8A, I think, is where they are, near Forest Gate Country Club. And Prologis owns those warehouses. And I got to tell you, the amount of blowback from the community is huge. So while they're overdeveloping, I do think that I wouldn't be surprised if it's $250 stock within like 3 years, long term. I think their management is good. I think they've got an eye on the prize. I think they're going to do better. I think we need more warehouses. I think there will be more direct-to-consumer products rather than bricks and mortar. I think the pandemic brought that forward, but I don't think that we're moving back to bricks and mortar. I disagree with the Amazon stuff, but MGM, man, look at this, is just a monster. PE is 13, forward PE is 35. Dividend is next to nothing. Target price is 53. For me, I think that $41, Brian, for MGM, I think that $41 price is the target. I mean, 46 is your 52-week high. 26 is your 52-week low. I kind of, in this one, I like this $42 line right here, where you can see it just ran up here. And I'm using FinViz just so that you can kind of look at it as well on your screen. But I like that 42. If you got out at 44, I'd look to get back in at 42. And I think you'll have an opportunity at 42. You could come down here and cover that gap. But, you know, gambling stocks, I mean, shit, MGM, it's just become a... Still have confirmation on the weekly. But God, that RSI at 65 on the weekly, it's just overbought. But you could get to this 51, which was November 2021. Well, let's look at Frontline. I don't even know what Frontline is. But I can look at the chart and then look at it. Hoof. Wow. That's awesome, man. That is awesome. You got gaps all the way down on this one. I don't blame you for taking your profit. I just think you might have taken it a little too soon. Their earnings came out. They're continuing a little bit up. I think you're near a 52-week high on this one, though. 8.44. 1929 is the, you're near the 52-week high. Great trade on both of these, by the way, because you got them near 52-week highs. Dividend 6.71%. I don't see an ex-dividend date, so I don't know when it's paid out, but I would say for this one, I mean, shit, it's an energy company. Energy's got to be coming down. This one's going up while everything's coming down. Seaborne transportation of crude oil. Transportation. Ooh, good move on this one. Um, 92% for 1 year. Performance year to date up 49%. Oof. This one's hard to say because while the transportation of oil is a hot space because they're having to move oil longer distances with the whole Russia situation. And pipeline, Biden doesn't want pipeline, so we can't put oil into one spot, blah, blah, blah. That gap down here at 15 seems like it would be something to come back to. But, God, that'd be a big move down on a pretty bullish stock. If it doesn't come down there, I'd say get back in at 17, close to $18. Because you're seeing right here between, if I'm looking at this 4-hour kind of chart, I'm seeing right here, if I'm just to do a little, that's kind of where I'm thinking. So that's between 16 and 1783. I know it's a big range, but I would say that would provide a good level of support. Let's look at some of the volume shelves. Let me pull the volume stuff forward. If I pull it here. Yeah, see, here's the thing. So if I look at, so these volume shelves over here, this is to the, where it gapped up January 10th. It gapped up from 11 to 13. And if I look at this one, I'm going to remove that. Most people are holding shares at 13. That's, I think, if I were to look at this, I mean, shit, there's no volume shelves up here. Everybody's holding down here. People are trading up here, but this is where you're really looking at. Yeah, and there's like Marathon Oil, the refiners. I think they're going to do well, but they're still getting killed, this one. So, but I agree with you, Christian. I think there's ancillary oil and gas that will do better than the big guys. I think the big guys are I don't know if they're coming to pick up. Episodes. Copy. Paste. And then boom, boom. And let's go to our notes. And boil. Okay. Boom. Publish now. Christian, you're right, man. That SPR. I'm just going to type in. Tweet. I'll put this in the... Okay. I think... Get out of that. Get out of that. Move you back here. I'm looking at... I seriously am looking at bond rates. Boils back down to 6. Let me look at NXC. I think NXC just had a cross up yesterday, if I'm not mistaken. March 1st. Oof. NXC. They lost 4 cents a share. Lost 4 cents a share. I mean, if you pull this to the highs here, let's see, NXC. Brandon, April 11th of last year. Average target price is $4.97. You're at $4. It's uranium in Canada. I mean, its market cap is only $2.61 billion. You know, I'd rather see you on this one per se. I think the 65-minute algorithm on this one, yeah, you'd still be out. I mean, look at that slide right there. You'd still be out. And I don't know when you'd get back in because the RSI is at 23. But it's completely oversold. Completely oversold. Brian, in this market, I don't blame you for getting out. I mean, you know, 20% gain is great. Let me see, Smyrna. I probably have to, you know what? I'm going to move you over here because I'm going to. Okay. No longer than 4 feet. Ooh, I'm screwed. Oof. Hold on. Let me look. I'm looking at. I cut down some. I should say I trimmed trees yesterday, but I definitely pulled out. I got a lot. I'd probably pull out. Honest to God, NXC. Hopefully you didn't buy at 423 over here and got greedy. If it was 423 over here, it's hard to say. I mean, here's the thing. NXC, they're not making money. There's no real catalyst. February 26th article, will they break even? Simply Wall Street, February 26th. Let's see where it was selling on February 26th. Oh. Shame on you, Brandon. You bought at 423 in November? And you wrote it all the way up here to $5? Huh. It's under 1 year, so you'd be subject to short term, so you could write it off against short term. It's hard to say to get out because after reading this Wall Street, after reading this one, if they're expected to post a final loss in 2023 before turning a profit in 2024, so they're expected to go profitable next year. They're 9% below their daily 20-day EMA. They're 10% below the 50-day and 5% below the 200-day. I mean, it's just, it's been a Roth. If you're, okay, here are your options. If you hold it, and they're profitable, you come back up here to 5. If you sell it and put your money somewhere else, you're more than likely going to make more money this year. So your reason for holding it, if it were me, the reason for holding it would be, hey, next year it's going to be profitable. But between now and then, you could probably make more money somewhere else. I mean, I hate guiding people that, sell. Remember, and I always teach this, remember why you get into something. You don't just get into something because, hey, it's at this price and I think it's going to go to this price. If you're doing that, you're just gambling. Like, for instance, Cleveland Cliffs, great example, perfect example. Cleveland Cliffs is one that I think they've raised their prices 3 times. They've kept the demand. They've increased their services. Boom, 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 boom. I believe it's a $30 stock. When it gets to 30, I may think of selling. On this downturn, I'm probably looking at actually buying more. But here's Cleveland Cliffs on the 65-minute. And it got us out with an 11% gain, which was great. But it hasn't gotten us back in. So I won't get back in until the 65-minute really tells me. Now, there's this gap here between 20 and 19. I'm probably going to add more here. Probably going to add more. But and when it gets to 30, that's when I sell it. I don't really look at short or long term, but I believe in A, the product, B, the management team, and C, the guidance. That's the big thing. Wells Fargo, similar story. WFC. I don't have it in our core portfolio. Wells Fargo I bought. I don't have it in the core portfolio, but Wells Fargo, similar thing. similar to, Cleveland Cliffs, is that I bought at around $40. Look, I should have gotten out of it at 46. It's down at 44. It's still on a downward trend. On the 65 minute, you wouldn't be on anything in the 65 minute. Am I adding more to it? I might, because I think it's a $50 stock. AI's all pump. It's all pump. C3 AI reported their earnings, and they said they were coming out with a March prototype of their here Paoli. Listen to the CEO, and this goes back to understand the companies that you're investing in. This is a company that basically, when 3D printing was big, they're a 3D printing company. Then they turn around and they say, we're an AI company. So they changed their name. They changed their symbol. They just did a whole 180 and went to AI. Then I hear the CEO come out on CNBC and spout off about how their AI integrates with Google. Well, artificial intelligence is not Google. Understand that Google is just a standard thing, and you type in what you're looking for. Artificial intelligence is a conversation, and he doesn't have that understanding, and he's the CEO of the company. That's what makes me think AI is just a hype play. There's a great, here, let's see. I think let's see if they have it on here. The news. Latest on C3 AI. I guess they don't have it. March 3rd. Earnings exchange. Yeah, I guess they don't have it up here. Let's type it in. Mind you, they're not making money, by the way, AI. It's just hype. Yeah, you can read about this stuff. It's hype. It's just hype. That's all it is. But is PXD positive? PXD is finally up to where I bought it, but it's after the dividend. Boom, boom. You got the ascending triangle in PXD here. This is on the 65-minute algorithm. Let's look at Boyle on the 65-minute algorithm. Where does Boyle fall in? I thought G in ChatGPT was Google, but it's Chat generative. Let's see. Stand for Chat generative pre-trained transformer. I thought it was Google. In fact, somebody mentioned that it was Google, that I was listening to their podcast or something, and I went on my podcast and said, it just stands for this. It stands for Google. Well, it doesn't. It doesn't. Oh, look at Boyle at 584. The 65-minute algorithm got you in at 625 on the morning candle. Or I'm sorry, yesterday's afternoon candle, but it's at 583. Look at that nice little 0.72%, 20%, 5.4%. Then you lose 10% right there. I think you covered that gap up to 780 at some point. I don't know gaps on this 65-minute one very well. But let's see. The averages are up slightly. It's kind of flat. Boyle just lost all confirmation. Here, look. I mean, that's Boyle today. It just lost everything. I'd be super, super careful with this one. But I still think $6 is your pivot point. I think you could play this down at around, I hate to call a bottom here because there's just no bottom in sight right now. But I would say 560. Just because that 550 to 560 in my mind. And I'm over here on Safari. Okay, I'm out. I may have to go cut some of these branches, but we'll see what happens. Let's see if they come back. Okay, see you guys tomorrow. No Sunita this morning, by the way. I guess she's done with us. She went big. Let's see. Let's see if she posted anything. Live. Managing an options portfolio. Relaxing music. Oof. Boy, that's a scary looking thumbnail right there.
But I can 100% agree with not wanting it. Bro, there was a video on Twitter that popped up yesterday of someone literally shooting someone in the head. And I'm just like, I get that you cut the content moderators and I get that you want free speech. And I'm not saying the video should necessarily be banned. I'm just saying no one wants to see that video. Like, I was talking to a friend who has a friend in Vietnam who's a Facebook moderator. And basically all day she's deleting videos of people getting their heads chopped off. And like literally the company she works for to moderate Facebook's posts, they have to send them to wellness retreats because they see so much vulgar crap that they have to delete that they need to literally have their mental health checked out. And so when I'm seeing this stuff on Twitter, I'm like, you obviously don't have content moderators, which I get it, but no one wants to see that. Like, just like no one wants to see someone getting shot in the head on their timeline. And like people are gonna watch it because people are curious and like that's how we are as humans. And I watched it, but like it didn't make me feel good after I watched it. It was pretty rough. Okay, let's look at a little bit at Meta and some of the.
So wait, the guy's arguing that nobody wants to watch somebody get shot in the head on Twitter, and literally goes right into, well, I watched it because I was curious, and that's the way humans are. Wow, there's a comment in here. I paid my lawyer ex-wife a retainer to protect me from you yesterday. I'll ask for a refund. Thanks for the heads up. This is funny. Guy's entertaining, though. Okay. I am out of here. You guys have a great day. I'm going for my walk. Let's see. Did we hit the next 65-minute candle on this one? No. We still have 35 minutes to hit the next 65-minute. Yeah, Christian. I mean, I will not watch them. I am not one of those. I don't think they should be there. B, if I see it, I'm not watching it. I have seen people getting shot in the back from the cop videos and stuff. It is horrifying to me to watch that stuff. I don't think it has a place. But there's a lot of people who will watch that stuff. So the question is, Tonth. Brittany, bitch, you need some sleep. Only airline I'll actually trade, I won't own, is Delta. Delta, I think, has run really, really well. But I'd trade it. And I wouldn't buy it now. Might sell it when it gets to 40. And buy it when it gets back down to 37. Even the 65-minute algorithm on this one doesn't work. So, okay, I am out. See you guys tomorrow.